Welcome to the Freedom Founder Podcast. I'm your host, Zach Duggar. Now, many of you have heard of investing in the stock market, maybe investing in real estate. But my guest here today, Fred Moskowitz, has an alternative investment strategy that others have not always considered or even known was even an option that was available. So he is an educator. He has worked with countless investors from all walks of life on how to create passive income streams of their own. He's also a best-selling author. And as a fund manager, Fred manages a mortgage note investment fund. He's considered an industry veteran within the note investing area. And he teaches the concept that the individual investors are able to step into the shoes of the lender through note investing and effectively be the bank. So he collaborates with investors, takes pride in that, helps them grow, and they profit in the note space, as well as is a trusted and valued resource in the area of alternative investments. He has a new book titled The Little Green Book of Note Investing, which we'll get back to at the end of the show. But Fred, I wanted to thank you for joining us on the show today.
Thank you. Thank you for having me on today, Zach. Appreciate it.
Absolutely, absolutely. Now, I always like to start the show by asking, how did you get started in the area of entrepreneurship? Has that always been a passion pursuit for you, or is it something that just kind of came along as you continued your walk in life?
Yeah, it's really interesting. I started out having a very long, successful career working as a computer engineer,
Okay.
and I really loved that. I spent so much of that time working at different technology and startup companies.
Yep.
And what happened was I watched my entire industry get turned upside down because we went through the bursting of the dot-com bubble. And right
Yeah.
right around that same time, we had the September 11th terrorist attacks.
Sure.
And so
Yeah.
there was all this turmoil in the world, and the economy,
Right.
especially in the tech industry, was in shambles.
Hmm.
And so what I realized was that I was way too dependent on the income from my job. Even though I loved the work I was doing, there was always all of these circumstances completely out of my control. And what
Yeah.
I learned was that no matter how talented of an engineer I was or how valuable of an employee I was, no matter what, if things were not going well at the company or in the industry, then I
Yep.
could quickly lose my job through no fault of my own.
Okay.
And so this made me understand that it was extremely important to have other sources of income so that I wouldn't be so dependent on the paycheck from my job.
Right.
And with that, that's where my interest in alternative investments started. I was on a mission to start buying and building assets that would
Yep.
generate income for me, and that's where I got inspired and got started.
Okay. All right. So, with regards to that, what were the alternative investments, or what did you get started with when you were looking to build and buy assets?
I started out with investing in real estate, investing
Okay.
in rentals. I built up a rental portfolio,
Yep.
and after and got I also got involved in some other investments as well, private investments.
Okay.
But after a few years, I started learning about the idea of investing in mortgage notes. And it was really appealing to me because what I recognized there was that I could invest in something that was backed by an asset with tangible value,
Right.
right? Because mortgage notes are secured by real estate,
Yep.
and I could earn a really high rate of return, and it was really easy to scale as well.
Okay.
So with those characteristics, it became very appealing to me.
Okay. So you
Yeah.
got personally started in that area of investing in mortgage notes, and then at some point you, it seems, realized that you could also help others to get educated and invest in that area as well.
Yeah, absolutely. It's something that grew over time.
Okay.
I was getting invited to speak and present at different
Hmm.
conferences and industry events, and more people were asking me about how to learn,
Right.
the
How to
business
do it.
of note investing, and
Yep.
so that really was what inspired me to write a book.
Okay.
Because sure, I could teach people one on one, but
Yeah.
there's only so much limits to our time, right? We all know that,
Sure.
and so writing a book, I have it in a way where I could reach many people,
Right.
and it's been a wonderful experience because so many have shared their knowledge, their lessons with me over the
Yep.
years, and this was a chance for me to do the same for others, but on a larger scale.
Absolutely. And what a great way to do that in a book, in a format that more people can access than a one on one coaching session, because that really takes a lot more time and intention to work one on one with a person. And when you can put something out there that a lot of people can access simultaneously. Now, with regards to getting into mortgage notes, I'm thinking
Mhm.
of myself in the area in which I live. So I live in Michigan.
Yeah.
And where do you live?
I'm in Philadelphia, in
Philadelphia.
Pennsylvania.
Okay.
Yep.
So I'm thinking that somebody who might be listening might ask the same question. What are there differences across state lines? Is that something that you've had to explore as you've worked with different people, and how
Yeah.
that whether that's even an option for everyone in the nation, essentially?
No, it absolutely is an option. We
Uh-huh.
invest in notes nationwide, all over the
Okay.
U.S., and there definitely are differences from state to state, and so
Yeah.
that's something you learn as you go. So each state has their own laws and rules
Hmm.
and compliance requirements and different things, and so it's a matter of education, getting up to speed, having the right team
Yep.
working with you, and an essential part of that is your attorney. So you can consult with an attorney in the state where the note is located, and they can
Okay.
provide that guidance for you. But over time, you start to learn the different nuances. Each state is different and has
Yeah.
their own characteristics for sure.
Okay.
Yeah, but
And that,
it's you can invest. You don't need to invest in the state where you live. You
okay.
can, but
Yeah.
you can certainly invest on the other side of the country, or
Yeah.
yeah, or the next state over.
Okay. Yeah, just like in real estate, where you could acquire a property in a more of a hot market, so to speak, versus one
Yes.
in which you live in.
No,
So,
that's absolutely
yeah.
correct. And another aspect of that is really about diversification, which is
Hmm.
something that is important for all investments. You want
Okay.
diversification that
Yep.
helps to manage your risks. And so when you diversify geographically with your investments, then there'll be some markets that are hotter than others. And there's always real estate cycles, right? And
Right.
mortgage note investing, it's not directly investing in the real estate, but it's associated with it and definitely impacted by real estate cycles, especially when property values change, because that changes the equity position
Yep.
backing your note.
Okay. Okay. So, note to self: don't invest only in McDonald's stock. Okay. Got it. Diversification. So, not
Yeah,
just in the stock market, real estate, but notes. So, this is an option to additionally diversify an investment portfolio.
it is.
Okay. Now, if there are some individuals who they like the idea of diversification, but they really don't want to figure it out. They want to be involved, but they also don't want to have to figure out, well, how do I do this? I don't particularly want to read a book, even though, I'm sure it's an excellent book, but somebody might say that, but they want that kind of an investment strategy. Are there options for someone to be involved in that type of investment on a more of a passive basis?
Yeah, absolutely. So there's two ways to get
Hmm.
involved in node investing
Okay.
for anyone interested. So you can go and buy individual notes and build a portfolio,
Uh-huh.
right? That's
Okay.
more, think of that as the active investment approach.
Sure. Yep.
Now, for someone that prefers a passive approach, and this is very, very common, a lot of people, like you said, they're interested, they like the asset class, but
Hmm.
maybe you don't have the time because
Right.
you are a busy professional or a business owner and you're focused on that. So investing in a note fund, which is professionally managed, is a great way for an investor to be involved passively.
Okay.
And what a note fund is think of it very much like a real estate syndication
Uh-huh.
where the fund managers go out, they raise capital, they bring all the capital in and pool it together in an
Yep.
offering, and then they go out to the secondary market and buy notes.
Uh-huh.
And they're usually buying in bulk quantity so they can negotiate better pricing, a better discount.
Sure. Yeah.
You achieve that geographic diversification that I was speaking
Hmm.
about earlier, because instead of the investor placing all their capital into one or two or three notes,
Yeah.
their capital is diversified across a whole portfolio. So it could
Okay.
be hundreds of notes or even thousands of notes if it's a
Okay.
large fund.
Yeah.
And what happens is for the passive investor, they get to leverage the experience, the
Hmm.
expertise, the relationships, the access to notes that the fund manager has, and benefit from that and receive a passive income rate of return that
Yep.
comes into them in the form of cash flow. And so there's so many different type of investments out there, but I always encourage all investors, make sure you have a component of your portfolio that's cash flow based, that
Sure.
earns income
Yeah.
no matter what happens
Right.
in the markets, go up, markets go down. It doesn't matter because you're
Yep.
still earning the consistent income. And so
Right.
having that as part of your portfolio, I feel it's really valuable. It adds a lot of
Right.
stability.
Yeah, absolutely. Yeah, so that gives the option to diversify the risk as well as the investment option to invest in a fund. Now,
Yeah,
for the person who says, I like that. I think that passive investing is great, but I like to go out there and do it myself. I'm going to
sure.
call a bank today and just tell them I'm in the note investing business. And will that work for them?
Well, here's the banks absolutely sell mortgage notes.
Okay.
I'm sure most of you out there listening, you've had this experience where you take out a mortgage, maybe you buy a
Yep.
property, maybe you refinance, and what happens in 2 months, maybe 3 months, you get a letter from your lender saying, "Dear Mr. or Mrs. Homeowner, please be advised we've sold your loan to another
Yeah.
lender.
Right.
And here's their contact information. Here's their address. Please start sending your payments to the new lender starting next month. And
Yep.
by the way, don't worry. None of the terms of your financing will change. The interest rate's the same, payments the same. Everything was agreed to in a legal contract.
Yep.
So everything's the same. However, please start making your payments to the new lender next month. This happens all the time. Lenders
Okay.
originate loans and then they go and sell them on the secondary market,
Yep.
and they get bought and put into securities and mortgage backed securities, all of these different Wall Street products. But then
Okay.
they get broken down and resold over time. And
Yeah.
so banks sell their loans in big packages, thousands of loans and
Okay.
huge transactions. If you go on Fannie Mae, Freddie Mac's website, they'll
Hmm.
show all the statistics of the loan sales for the last quarter.
Okay.
Those get bought and sold, and then over time, they're broken down, recategorized, resold into smaller quantities.
Yeah.
And so eventually it gets down to the level of individual investors, and you can buy them from smaller hedge funds, smaller
Okay.
note funds. You can buy
Hmm.
them from individual investors. All of us in that are active in the industry, we buy
Yeah.
and sell loans to each other all the time. It's very common, and so
Okay.
that would be for someone starting out. That would be the more appropriate venue to
Hmm.
find notes to buy.
Okay. Why do banks or these larger companies that are originating the mortgages, why do they sell those notes?
Yeah, it's all about the velocity of the
Hmm.
capital. Banks' business model is to and lenders is to originate loans, and then they have to recapitalize. So they
Yeah.
sell the loans at a slight discount, recoup their capital, and then the very next day they can turn around and originate a new loan for someone else. And you
Okay.
do that very
Yep.
fast with a um, low profit margin on each
Hmm.
loan, but the velocity is so high, and
Yeah.
they make their money from the fees and the origination and the points
Hmm.
that charge and all that. And
Okay.
so that's the model that you see with banks, with mortgage brokers, with a lot of these lenders that uh, make a big name for themselves with the marketing and offering products.
Yeah.
That's the business model, and so they won't
Right.
originate a loan and sit on it and hold it. They'll sell it, and the loan will go into a mortgage-backed security that gets sold on Wall Street, or
Yeah.
it'll be sold to a pension plan that holds them. But they also will end up being bought by individual note investors as well.
Okay. Very interesting. This is a topic that I don't know a lot about, and I'm sure that a lot of our listeners don't either. So I think it's very fascinating.
It is, but everyone knows the concept
Yeah.
of a mortgage and a note from
Right.
being the borrower and making the monthly payments,
Yeah.
right? But when you
Right.
become a note investor, you basically step across the aisle and now you become the one receiving the monthly payments.
Yeah.
And so
Absolutely.
it's a benefit from the real estate without having to own the real estate, without having to
Yeah.
manage it and have the
Sure.
responsibilities of maintaining a property.
Yeah. Absolutely. Have you ever had the circumstance where you did become the owner of the real estate because of a default in a loan?
Well, here's what the thing with defaults. It's
Uh-huh.
always a risk. It happens, but it really doesn't happen very often.
Okay.
Most of the time, when there's a default, it gets resolved somehow.
Okay.
It gets resolved through restructuring the loan or
Hmm.
different options that can be put into place.
Yeah.
Working with a good loan servicer is so important for that because they handle a
Yeah.
lot of those activities, a lot of those responsibilities, and
Yeah.
so no lender wants to take a property back.
Right.
It's
Sure.
expensive.
Yeah.
It wastes a lot of energy and focus, and most of the time, what you see is that any issues like that they get resolved. Some
Yep.
kind of an agreement gets reached, and if any of you ever were involved in investing in real estate, where
Hmm.
maybe you want to go to a foreclosure sale and bid on properties at auction, well, what do you find that there might be hundreds of properties on the
Uh-huh.
docket for sale, and very few of them actually complete sale. Very
Okay.
few. The majority of them, the sale gets called off or it gets
Okay.
postponed, and it's
Yep.
all because some kind of negotiations taking place behind the
Yeah.
scenes, and so that's very common, very common. And so it
Okay.
really doesn't happen often like people would tend to think. Yeah,
Yeah. Yep.
I
No, that's
found that a lot of investors that had the idea to go and try to buy properties at
mhm.
foreclosure auction get disappointed pretty quickly
Yeah.
when they realize that so few of them um, actually transact and
Right.
get to a closing.
Because there's a period of time, right, from that foreclosure date in which they can reclaim, or if that, I'm not sure if that's the
There
term, but
is that's
yeah.
specific to Michigan, by the
Okay.
way. Yeah,
Okay.
yeah, the right of redemption.
Yeah.
That's one of the nuances in Michigan that
Yeah.
has that, but
Okay.
absolutely, and it's there for a good reason because homeowners want to do everything possible
Yeah.
to protect their property, and that's
Yeah.
totally understandable. So
Right.
that happens very often.
Okay. Well, let me ask you a question I ask all of my guests in regards to, if you were to be handed $1 million today with no strings attached to invest in your business or yourself, and what way would you use that money and why?
Wow, this is a great question. Um, what way would I use that? Um, I would say I would take between 5 and 10% of that
Hmm.
right off the top and invest in myself, in my own education
Okay.
and expertise, learning skills
Yep.
in whether it's related to business or investing, some type of investment in yourself. I feel that's so important, and everyone should do this, whether you're starting out
Right.
or whether you have 20 years of experience. There's
Yeah.
always new things to learn. And so never be shy about spending money on yourself, on your growth and your education. It's money
Yeah.
well spent. And then the remaining of that, I would invest into some other asset classes, that ones that I'm not directly involved
Hmm.
with for diversification
Yeah.
purposes.
Yep.
I love investing as a passive investor in different deals. There's so many different
Sure.
opportunities out there.
Right.
Um, I love real estate as an asset class, but I'm not going to be the one that has good skills to manage a 500 unit apartment
Sure.
complex. But there's
Yep.
other guys out there that they do this every day and
Yep.
they're excellent at it. So I would invest money in someone else's deal that they manage and control,
Right.
and I can be a passive investor. And then another portion would
Yep.
invest in the area that I'm active in. So
Yep.
I would split it up that way. But the
Yeah.
most important
Great.
part of that is that top piece.
Hmm.
Slice off a piece of what you have, of your time, of your money invested in yourself.
Perfect. And I really like that answer, and I think that putting that back at the top again, investing in yourself is key. So
Yeah.
it's very clear from our conversation that you are an educator. I appreciate just the additional insights into this concept of investing in notes, but also just sharing some of your experiences as you've started this journey. Now, if other people would like to reach out to you to find out more about what you're doing, what you're working on, or just the area of note investing, what's the
Yeah.
best way for people to connect with you?
Yeah, thank you, Zach. I appreciate that. I always love connecting with investors uh, and sharing my knowledge and expertise and building relationships. That's what it's all about. Best way to
Absolutely.
reach me is by visiting my website, which is fredmoskowitz.com.
Okay.
However, if you prefer an easier spelling, you can go to giftfromfred.com and that will take you right to my website. I have a special report about note investing and be happy to send out by email. And if you prefer to text me, you can also text me by texting the keyword money to the phone number 215 461 4433, and then following the prompts there.
Okay. So texting keyword money to the number 215-461-4433 or giftfromfred.com. We'll
Yep.
keep that simple, but also you get that additional special report, as
Yeah.
Fred mentioned. I also want to remind people about Fred's book, The Little Green Book of Note Investing. Some of us go on to talk to people, even though we all should, but you can learn a lot from that, and then reach out to Fred because you're going to need more. And as Fred said, investing in yourself is key and critical. And if you're going to get started in a new area, find a mentor, find a coach, find someone who's done it before, and they can help you on that path in your journey. So there's a lot of mutual benefit working with people that have an understanding and someone who's hungry to learn. So Fred, thank you very much for your time today and sharing your experience and your knowledge with our guests.
Thank you, Zach. It was great interview. Thank you.
Yeah, I appreciate it. Take care.